Oil prices have been on a rollercoaster ride after dropping almost 5% on Thursday. They were back up 2% on Friday. That followed assurances from Saudi Arabia that OPEC and non-OPEC countries are close to agreeing a deal to continue their production cuts for a further 6 months. The problem is there's still a glut of crude. With US shale oil drillers pumping more, US output is up more than 10% since the middle of last year. European share indexes all enjoyed healthy gains on Friday. Paris up over 1%, with opinion polls showing centrist Emmanuel Macron with a commanding lead over the far-right's Marine Le Pen going into Sunday's French election. This analyst said the opinion polls definitely have not reflected reality in recent times and last year. But in the case of France, the belief among stock exchange traders here is very clear. Mr. Macron will win the election. We can't exclude the risk that Madame Le Pen will make it, but the likelihood clearly is that it will be Macron, and the stock exchange is happy about that. So, despite the populist shock of the Brexit vote and Donald Trump's election in the United States, financial markets are operating on the basis that an upset is highly unlikely, with Macron the most market-friendly candidate. Le Pen has campaigned on pulling France out of the single European currency, and the polls' prediction meant the euro was trading strongly, touching a 6-month high of almost $1.10.